Okay, let's welcome on board then our market guest for the evening. Peerless Mutual Funds Rajiv Shastri joins in with his take on where he thinks Indian markets are headed. Rajiv, good evening. Thanks so much for taking time out for us. For now, at least, we're, entering uncharted territory. What do you make of the valuations of the market then, right now?
Okay, there's been a boost that has been given to valuations by a not entirely unexpected interest rate cut, but I think it was a little earlier than what it was expected. And I feel that, the markets, the way they have reacted, it's been some sectors who have jumped up suddenly, sectors which benefit out of the low interest rate scenario. We've seen banks and other interest rate sensitive sectors actually doing quite well. But at the same time, there is an expectation that was there in the market and continues to be there, that the economic circumstances will improve considerably. This is where we feel that the markets are probably running ahead of valuations a little bit.
Right, Rajiv, but there is talk in the market that market will continue to be fueled by hope, at least, or hopes of a big bang budget this time round. Do you think we are getting into a kind of a pre-budget rally now?
Well, expectations have been high from this government from the time that they've come in, and a lot of the action that they've taken so far has been, pretty much on the lines of what was expected. The results of those actions are something that might take a little more time to manifest, and that is precisely the concern here, that if there is a timing gap between what the market is expecting and what results are delivered on the ground, there might be, while there is a scope for a pre-budget rally, there might be disappointment afterwards.
Right, Rajiv, what could a big stimulus mean from the ECB side for Indian markets? Because this is almost a given now that anywhere between 500 to even a trillion euros could be the size of the stimulus coming our way.
See, an increase of in liquidity anywhere in the world, flows into the emerging economies in the form of capital flows. So, it would be, I'd be actually look forward to seeing a stimulus being announced out there, which then translates into, more capital flows into our economies. But at the same time, we have to be very, very aware of the fact that these capital flows are inherently FII flows. And, they can turn on a dime as we've seen in 2008 as well. So, these are not sticky flows. These are flows that are volatile. And if the stimulus does happen in the Eurozone and money starts flowing in, I think we need to look at that with a little bit of caution as to what level we allow them to take the market to.
Rajiv, how impressed are you with third quarter earnings so far?
I think it's been pretty much along what we expected, though I think people have been disappointed a little bit, once again because of the timing mismatch between what they were expecting from government measures and the actual results. Most government measures that have been taken, and most that can be taken by the government, manifest over 9 to 12 months. And I think people have been expecting the measures to actually show up in results a lot sooner. So I guess some part of the market is disappointed, but at this point of time, with the good news, from an interest rate cut and possible capital flows from other countries, I think the markets are holding up.
So then, having said that, when do you expect the good times to roll? What kind of earnings growth do you see, say, over the next 2 to 3 quarters?
I think earnings growth will start manifesting 2 quarters from now. And the initial pickup may be small, but if there is if there is on-ground improvement in economic conditions, right, then earnings growth really won't play much of a role in the way the markets work, in the way the markets pan out over the next 3 or 4 quarters. So earnings growth is something that we are confident about. When you talk about 4 quarters, we are saying 15% is something that we are confident about. But market returns might be slightly higher than that as the market gets to, they get to a little more euphoric zone as economic conditions improve.
All right, Rajiv, we'll let you go on that one. Thanks a lot for taking time out for us and joining us on the show. All right, let's take a short break on that note. On the other side, we'll put the spotlight on global equity.